Power Play, the future of energy. Brought to you by Petronas.
All right, we're going to focus in on Chinese property, and it looks like the sector is enduring a slowdown as oversupply of residential housing drags on the market. A Reuters study showed that and found that short-term debt ratios of mainland developers are hovering at close to two-year lows. Now, in the midst of this, we have the Chinese property giant, the largest on the mainland by sales, Vanke, starting its 8 shares trading today, and this share conversion is expected to give Vanke wider access to offshore capital markets and get institutional foreign investors to get involved. Also with us, Marc, Desmidt, of course, of BlackRock, our guest host throughout the hour. And how significant is this move? Because it's been well flagged. I mean, B shares are basically antiquated, out of use stock offerings, so they're coming here to Hong Kong.
Now, this is great news for Vanke because it basically gets them in front of a lot more shareholders on a much wider basis. It'll also hopefully lower their cost of capital because to date they've only really been able to tap the domestic capital markets to raise either debt or equity, and that's much more expensive. So it's meant that their return on equity, return on assets, their profit margins have been lower than many of the other property developers who are listed in Hong Kong.
Now, why would investors want to buy in, and especially foreign investors who've been hearing all this negativity about the Chinese property sector?
We've seen nothing but bad news about the property sector for months and months and months. The stocks have underperformed massively over the last year or so. And why is that? Well, it's because of policy risk. The policy settings on the property sector have been very negative now for the last couple of years. But we're now getting to an inflection point. Property market is slowing down. The construction starts dropped 25% in the first policy settings to be more encouraging, to be more positive. For example, the People's Bank of China a couple of weeks ago instructed 15 banks to increase lending to first-time buyers for mortgages. They're reducing the reserve ratio requirement for some banks.
Right.
So the policy settings are changing from negative to positive.
But Daily yesterday said the clamps are still going to stay in place in the real estate sector in China.
Well, they're not. It's simply not happening.
Oh, the fact stealth-loosening, is it?
Yeah, they're loose. The fact of the matter is the People's Bank of China has told banks to lend more to first-time buyers. It has reduced the reserve ratio
Have you
requirements.
heard this, Marc?
No, I mean, well, I'm not the property expert, so I'm the wrong person to ask.
That was about 3 weeks ago. So the policy settings are changing, definitely, and a lot of the smaller cities are rolling back those property cooling measures they put in place in the last 2 or 3 years in individual cities because they're hurting. Property sales are down, prices are down, their revenues from property sales as municipal authorities is falling. So individually, a lot of the cities are rolling back these changes. So,
well, okay, these are compelling arguments, but international investors like Marc and BlackRock are still not buying in.
We're cautious on the property sector. I mean, obviously there's this financial stress. We want to see how that evolves. I was going to ask you, Peter, if you think there's opportunities for consolidation.
Oh, absolutely. That's exactly what's going to happen here because a lot of the domestic property developers that are not listed, there's about 80,000 of them. 80,000 property developers, huge. And many of these are badly financed, they're in trouble. And so companies like Vanke, China Overseas Land, are going to be the consolidators in the industry. The industry's trading at the cheapest valuations we've ever seen. Vanke is trading at about 4.7 times earnings, which is record lows. It's trading at about a 50% discount to NAV. Its gearing level is 40% net debt to equity, which is not
Is that not
onerous.
high for China?
No, the average for the sector is about 50%, so they're below average. There are companies with 150%.
That's right.
But the average is around 50 for the top. These are the companies that are listed in Hong Kong. So I think financial risk for the sector is very, very low.
Would you risk your own money buying into the stock?
Yes, absolutely. And I will definitely, I'm certainly a buyer of the big stocks. And these stocks like Vanke, China Overseas Land, China Resources Land, they are not going to get into trouble. They are big SOEs. Right. They're always going to have access to capital within China.
And they have money on the balance sheet,
absolutely. Their ratios of interest cover are high as they are, almost as high as they are in Hong Kong, which is one of the most lowly leveraged property sectors in the world.
Now. 1997.
Well, exactly. Even in 97, they were lowly leveraged. But they are now, average debt to equity in Hong Kong companies is 11%. I think it's about 60% in the US or something like that. So Hong Kong companies are looking good.
Yeah. And also, you are a minority shareholder. I want to point out to OK.com, since I just went on that website and I saw this picture of Peter Churchouse saying free newsletter and free advice. OK.com, basically it's this new website that tries to sell property in a more sophisticated way than you get here in Hong Kong. Property pricing, though, we've been talking about this, an obsession in the city. Is it coming down anytime soon?
Well, basically, average residential property prices in Hong Kong are down about 5% over the last 12 months. But I think we've probably just about seen the end of that. In the last months, we've seen property transactions picking up quite sharply in the primary market. We've seen Chung Kong and Sun and Kai, New World, Sino selling pretty rapidly.
That's not what I want to hear, Peter.
I know. We all want to buy in cheaper, that's for sure. But I'm afraid it's probably, 3 months ago we would have said there's probably a lot more downside risk.
Right.
As we sit right now, things have changed again, and we're probably leveling out. I don't see a lot of upside risk either, but I think the downside risk is pretty much capped.
Okay. Well, Peter, thank you so much for making time for us. Good talking to you. Peter Churchouse there of Hard Assets, Asia Hard Assets. How'd you come up with that name? The Hard Assets Report. Okay, and Marc, we're saying goodbye to you too. Apparently you have to leave.
Right. Thanks,
but next time, can you just wear something a little bit more dramatic? A little bit.
Try. Like a red tie.
Marc Desmidt there of BlackRock. Okay, so we are going to get a break. Coming up, they may not have made it to the World Cup.